can.
Either way. Okay, cool.
Thank you for
Hi,
the
you
reminder.
guys. Welcome back. I've got it live streamed in EXP Family Tree. Reminder, you guys, every Monday, Angie Gerber is coming in to talk about the market, to talk about mindset and motivation, 20 minutes, fast and furious. We want you to get your week started right. So we just made this change because those of you that are into the Agent Attraction, we've all been on the call on Wednesdays at 10 a.m. Pacific, 1 p.m. Eastern with Rich and Hank and everybody. So we're already getting our fill of that. And so we thought, well, Mondays, we should still keep something going for you guys that want to make sure you stay engaged and accountable and get your week off started on a right foot, really, because it matters how what you stay updated on, what your mindset and your motivation level is on a Monday. It's like critically important. So anybody and everybody's welcome. If you've got a friend that would like to join, just give them the Zoom link. We got this out on YouTube as well so that people can stay abreast of what's going on in the market, and some motivation and mindset tips from Angie. And of course, it is live in EXP Family Tree, and it's going to be live streamed and it will stay there forever. So without further ado, Angie, take it away.
Thank you. Yeah, and Nikki, who will give us a market update. Oh, she's actually joining right
now.
I usually let her start off the call, and then I will honor your time and I will fill in the back end with mindset. So Nikki, thanks for joining us as always.
Hello, how's everyone doing?
Fantastic.
Good.
Well,
so we're gonna start with the market.
Yeah, absolutely, Nikki. You're up. I will honor your time as well. So you have the stage.
Yeah, so I will just hop right in. Yep. So interestingly enough, we got some reports last week regarding housing and median prices. Are home prices going down? What's happening on the sales front? Less sales overall, and the big media hype is telling us that month over month, the amount of sales has declined, and also the median price of sales has declined, which in the media's eyes tells us that things are going downhill, home prices are lower than they need to be, et cetera, et cetera. But if you actually look at the data and you actually talk about and take a look at what those numbers actually mean, what is really happening is that month-to-month number that they speak of is actually annualized over 12 months. So if we see any decline from September to October, it's going to be annualized over 12 months to make it look like there's a 10% drop in the number of home sales that are actually happening. But if you actually take a look at the real numbers and go year over year, in other words, compare October of 2022 to October of 2023, what we're actually seeing is a very level off and in fact, an increase of number of homes that have sold from last year to this year. So it's really interesting data. The other part to think about is they're saying that the median home price sale is going down. Well, yes, that might be true. However, what is actually happening is not the actual sale of the home in particular, but the number of homes that have sold at a certain purchase price has gone down. So really the breaking point is about that $500,000 mark. So the amount of sales over $500,000 has declined from about, I think it was like 16,000 down to 14,000 from, a month over month comparison, versus the number of homes from under 500,000 has actually increased by over, 200,000 sales. So you really think about those numbers and what they actually mean. And it's really important to know the data, really important to be able to strip it down and understand what's actually happening in the housing market. Home prices on a house per house, property type per property type comparison are actually not going down. They are actually appreciating. They are increasing. It's just the categories of homes that have sold in each category. In other words, 150,000 to 200,000, 200 to 250, et cetera, is on the rise, whereas the homes that are over 500 is on the decline as far as those selling. Also important to note, this data only counts homes that have sold that are registered on an MLS anywhere in the US. We're not talking about for sale by owners. We're not talking about contract for deeds. We're not talking about seller financing or any other options that are out there. So it's important to note that really what the data is telling us is the amount of homes that have sold is increasing. The value of those homes year over year is increasing. It's the category that has changed in where clients are buying. So really interesting information. Naturally, it's going to happen as we see interest rates increase. They went up into the 8% range. yeah, you're going to look for less of a house that you qualify for because obviously your income hasn't increased as much either. So that's important to note as well. On a rate or on an interest rate standpoint this week, we actually are really seeing some awesomely positive numbers last week. So dip down into the low sevens as far as interest rates go on a 30-year conventional fixed mortgage. All the reports that are coming out this week, we have an employment report that's coming out this week and also a jobs report that's coming out this week. As a reminder, I've said it before, it's as unemployment increases, and as inflation goes down, mortgage interest rates tend to get better. We are hitting right now, we are just above a floor. The 10-year treasury is at about 4.3. If we can push it down just a little bit further down into that 4.1 range, and if it can stay there consistently based on the jobs reports that are coming out, what predicted is happening and what normally happens is once it reaches that one floor of about 4.1-ish, interest rates tend to drop quite dramatically after that point because there's a lot of room for them to toggle up and down on the charts is basically the easy way of explaining it. So we're really hoping that as we move into the new year, there's going to be some great information on interest rates, some great decrease that's going to happen. And then we're hoping that as that 10-year treasury tends to push down, we can see some awesome improvement into the rates, hopefully into the sixes.
Yeah. Well, and what was coming to my mind as you were talking, and I'd love to just have an open and honest conversation with here so that we can go out and talk with our prospects and clients, is what I'm hearing like the media potentially doing is using these categories. Just like as agents, we can spin anything into a buyer's or a seller's market, and it almost sounds like they're spinning this. So I guess how do we go about, if we can just have an open conversation of bringing this information to our prospects or to our clients, and not decrediting and discrediting, but discrediting the media in the categories they're using, or make this so that it's actually what it is versus what they're wanting it to be?
That's a great question. I think it's important, as far, and you guys can give feedback too on ideas. I think it's important that you guys have a lot of information at your fingertips when it comes to the MLS and things that have sold. Running those charts, running those numbers for your clients on those price ranges and saying, okay, this is where the homes were pricing last year. This is how many sold in the price range that you're looking in, or even to your sellers. Again, here's your price range. Here's what's sold. Here's here's where we're at. And having that actual data in front of their hands is super important. Helps us put a strategy on our side as well to help people, finance things in a smart and concise way as well. Just having the data at your fingertips and know what you're looking for. It's important for the seller to know that in their price range, in their neighborhood, here's how many homes that have sold. Here's what the price range that they're selling on. Do the research, do the work up front so that they know and have confidence in what you guys are sharing. We do a lot of, work on our side up front as well. Hey, if you did, purchase a home in the 350 range, this is what it looks like. Here's the difference between 350 and 360 sometimes. Here's the difference between 350 and 400. So they can see, where's my payment comfort? How much more of a down payment do I need? Does that change the interest rate? How does that affect my qualifying, opportunities, things of that nature? So it's really important to just have that data at your fingertips, in my opinion, and be able to share it with them. And, really head off those questions before they start listening to the media and start listening to the things that they hear online. One of my very first discussions whenever I talk to a client is, kind of hinting around to the idea of, what have you seen online? What have you been researching? Because usually when I talk to a client, they've already gone online, they've gone on Zillow or gone on some mortgage calculator and started to run payments and go, oh, good, I can afford a $500,000 house. But the reality is that those payment calculators are, really designed to help people trigger and pick up the phone. They aren't designed to give real information. So really understanding what they've heard up front too is really important, and what they've researched on their own.
Yeah. So come from curiosity, meet them where they're at. And I think the most important thing I'm hearing right now is don't go, like I coach people to all the time, when someone asks you, how's the market? Don't just, like throw up everything all over them. Ask, there's a lot going on. What makes you ask today? You know, and be curious. Is it just to have a conversation? Is it kind of like, hi, how's the weather in Minnesota? It's just a nice thing to do. Or is there a reason for their question, and meeting them where they're at, coming from curiosity? And you said it, be educated. So be able to talk to, what is the media categorizing this in? How are they doing this? So this applies to this type of market, or to these people, or to this is what they're actually talking about. And in your circumstance, and meeting you where you're at, this is what we'll focus on. So it's really, again, having a holistic education, a holistic understanding, and most importantly, you know, asking the right question, asking open-ended questions, and coming from curiosity, and really understanding what research they've done, what mindset are they coming from, what, you know, do they think is going on versus what is really going on, and being able, it's almost like objection handling, taking one at a time and handling it, letting them know what you know and the data to support it and show and prove it, and then the next one. And because sometimes we have to undo a lot of what's been done, and kind of take that tangled ball of yarn or whatnot, and just start pulling it apart, and really getting down to what's facts, and what's just been, you know, aunts, uncles, brothers, you know, all of a sudden these people all come in and are experts and have no right to be the expert, or who they should be taking advice from. Yeah, I love that.
Yeah. Yeah. It's also interesting because, you know, we all know that people are going to do what they're going to do. You know, they're going to make the decisions that they're going to make. And, you know, we can give the advice and just be there as a support system, and also understand that they're not necessarily going to take the advice that we get them, that we give them. But it's important to just, like you said, meet people where they're at, and kind of see, okay, how can we be the best of service to them and the best of support to them as they're going through whatever they're going through, and making those decisions, maybe even based on reasons that they won't even share with us, or that we're not aware of, you know, which is can be a huge part of it as well. And, you know, just making sure to have the data on a, you know, more drilled down case by case basis or borrower level. You know, on my side, this week has been really interesting as far as having discussions with people on conventional versus FHA. And we're seeing a lot more buyers come into the market that are FHA approved that can still get accepted purchase agreements. So it's interesting, you know, just on another point to kind of switch gears a little bit here, is to, you know, really have that conversation with your sellers about FHA buyers. What does that mean? Why is that, you know, regarded as a more difficult process? What can we do to help ease their mind as we have these FHA buyers come into the market? Because there's more people that are qualifying for FHA loans right now that can also be able to negotiate deals on properties, simply by the fact that the market isn't as saturated due to the interest rates and due to the home prices and what's out there and what's available. So as a reminder, from an FHA perspective, really the only difference from a lending is the appraisal, the health and safety standards that follow that appraisal. Keep in mind, just because you have GCFIs, outlets that need to be put in, a broken window, peeling paint, you know, things of that nature that need to be taken care of on an FHA loan, from a seller's perspective and also from a buyer's perspective, it's important to keep in mind that you can finance those repairs on an FHA mortgage into the borrower's loan and still close the loan on time and still close as expected without additional cost to the seller. So that's really important to keep track of, and really important to note. An FHA buyer doesn't mean they're any less qualified. It may be a strategy. It may be because they had a significant credit event. It may be because the mortgage insurance is cheaper. And it just may be because they don't have as much of a down payment or don't want to put money towards a down payment. Or it could make sense for a host of other reasons. So just keep in mind when you're talking with sellers and with buyers that FHA isn't a dead loan. It isn't a, you know, something to be shied away from. It is a qualified loan just as much as a conventional loan is. In fact, there's even some more rigor that has to go into qualifying a borrower for FHA financing than conventional in a lot of ways. So just a reminder, that's what I've seen on the streets, besides just the market and the interest rates and these high level data. On the streets is more reminder on those FHA buyers as you're dealing with selling and buying and making deals.
Yeah, I love that. And it's just like anything. Sometimes we learn what we learn. Now we need to unlearn and relearn it, because that's really, I mean, if you think about when that mindset came in about FHA versus conventional and how much has changed, and that, a lot of the agents have been doing this and just kind of aren't going through the process of unlearning and relearning. It's a paradigm, and it's just a habitual behavior and something that's just instilled in them that they haven't removed. So therefore they pass that along to their clients. And it's so different than it was when that stigma, or that was actually, maybe it was true at one point in time, and it's no longer. So definitely, I love that point. And again, educate yourself, understand this, have these conversations, and show the data that they're more qualified, they've been through more. You can almost, if you flip it, you could be rest assured even more that they are very well qualified. Yeah, I love it.
Absolutely. Yeah, it's perfect. So yeah, that's also, and just a reminder, that also applies to VA buyers as well. Just because they aren't putting a down payment down does not mean they're any less qualified. They have the advantage of being able to not have to put a down payment down. The health and safety standards from an appraisal standpoint are the same as an FHA. And again, we can finance the repairs into their loan on a VA loan as well.
I love it. Absolutely. Well, it's 12:20, so I want to again honor everyone's time. Anyone have any question quick for Nikki, or want to add anything before we go? Okay, well, I'll just close off with, I think that we said it, as for what you can do this week, educate yourself. Get on the phone with Nikki if you have any questions or need any clarification. Understand how to come from curiosity, ask the right questions, and it's almost like know when you're asking the question that you have the answer. And the only way you're going to have the confidence to do this and to have these conversations at the high levels you should be having them is if you have that holistic understanding and approach. And that's why Nikki's here. She's put her information in the chat. We'll get it in the live stream, and we'll get it on the YouTube so that you can see in the comments how to get a hold of her. But just real quick, for the people that are on this call live, her cell phone is 952-484-1584. Reach out to Nikki Erickson with Loan Depot. As you can tell, she's a wealth of information and can help you get it done. So
awesome. Thanks, Angie.
yes. Oh, Cari,
and also she is available in most states. If she can't service you in the state, she has partners. So for those of you watching from all over, it's important to be able to have someone. I mean, Nikki is an investor. She works with investors. She invests in real estate herself. She does personal transactions. I think it's important to, really have somebody that understands at a high level and has been experienced for many years. And we just find that Nikki has helped a lot of us, throughout the country, a lot of my partners. And so she's willing to come and give us an update every Monday. So thanks again, Nikki, for that.
Absolutely.
Thanks, really good information.
Yes, absolutely. Thanks, everyone. We'll see you next Monday. And in the meantime, let us know if you need anything at all.
All right, you guys, get into action.
All right.